Welcome to another weekly analysis video on movement charts. Hope everyone had a good weekend. Starting with SPY. SPY printed a bullish engulfing candle on Friday after the indecisive doji candle on Thursday session. Looking at the lower time frame on SPY, moving on to 5 minutes. We had these levels drawn on our Thursday intraday price action video, and we discussed about the near-term resistance support zones. Thursday, SPY had a double bottom pattern as we discussed on the Thursday intraday analysis video. We marked these two as support. This is our first support, which was the breakout of this double bottom, and this is our previous higher low level, and we had this resistance marked and this one also marked. On Friday, right at the opening, it gapped down below the first support we marked, but it took support at this double bottom, and it again broke this double bottom neckline. Then it pulled back to test this 20 EMA. At this level, if we see, it had a nice bullish reversal pattern. We pulled back to test this double bottom neckline breakout and swept the liquidity below 20 EMA and printed a doji candle, and it printed a bullish engulfing candle as a follow-through candle. This is a bullish reversal pattern after sweeping liquidity below 20 EMA, and it popped on the next 5 minutes. If you look at this candle, this 5 minutes candle in the 1 minute time frame, it was $4 move within 2 minutes. After that morning star pattern formed in 5 minutes time frame, after this morning star pattern and at 5 minutes time frame sweeping the liquidity below 20 EMA and testing this neckline breakout, it popped quickly to test this resistance, the second resistance we marked on our Thursday analysis video. Then it was just trading between those two levels for the whole day. But if you look at the hourly time frame, this was the first hourly candle on Friday, then this is the second hourly candle, and then it left a fair value gap between those two hourly candles. And if you go inside the 15 minutes or 5 minutes lower time frame, we can see that price pulled back into that fair value gap formed on hourly time frame, and printed a hammer followed by engulfing bullish engulfing candle, and it again moved to test this resistance. If you look at the daily time frame, as we see, it printed a bullish engulfing candle closing above 20 EMA after the doji candle on Thursday. Now it filled this gap also. So we may go and test this resistance at 692 and 695, or even this strong resistance at around 697 level. If you look at the weekly time frame, looks a little better because last week candle was a bullish engulfing candle sweeping the liquidity below 20 EMA on weekly. And taking support at this major support level where it took many times previously. Looking at the monthly time frame, we have one more week to go. It took support from 5 EMA level, and we are still consolidating for around 4 months now. We are a little far away from the 20 EMA monthly time frame. The daily and weekly time frame looks good so far. Moving on to Microsoft. Microsoft is still consolidating within the previous gap. It has a bearish fair value gap here, which needs to be taken out first for any bull case scenario. It has been consolidating between these two range, around 404 to 395 level in these two range for the last whole week. We need to see how it reacts to this fair value gap and this previous low in the coming days. Any rejection at this fair value gap or this 20 EMA levels may lead to push down to collect the liquidity below this previous swing low. Any candle closure above this fair value gap and a retest into those levels with a bullish candlestick formation reaction may lead to test this resistance at 443, or even to test this larger gap formed during earnings. If you look at weekly time frame, it's still consolidating within the gap as we seen in the daily time frame. The RSI is below 30 level, the oversold level, and we are near to the 200 SMA. So we'll have to watch how it reacts to the daily time frame support and resistance levels. Looking at the monthly time frame, yes, again we have completely mitigated that gap. Let's see how this week goes for Microsoft. But on the daily time frame, we have this bearish fair value gap and this 20 EMA to keep an eye for the coming sessions. Looking at Apple reversed from exactly at the 78.6% FIB levels from this swing low and swing high, forming a double top, and it printed a back-to-back bearish candles, and it disrespected this bullish fair value gap formed during this up move. Last week it retraced back into that inverse fair value gap and tested this 20 EMA. So we'll have to see how it reacts into that zone on the coming days. If we see a candle closer above the zone, then Apple will be bullish to test this resistance and even to break out this resistance on 280. If you see a bearish reactions in this zone or from these EMAs, then we may come and break this swing low to fill this gap, eventually to test this swing low. Looking at the weekly time frame. On the weekly time frame, Apple had a long bearish candle on the previous week, and in the last week it printed a inside bar. So any closer above that inverse fair value gap formed on daily time frame will keep the Apple's uptrend intact. Any closer below this swing low may lead Apple to test this gap or this support area. Looking at the monthly time frame. Apple looks okay because we are seeing it is taking support from 5 EMA and 9 EMA. So it may consolidate between these range, or it may come and test 20 EMA. It depends on how it reacts to the levels on daily time frame. Also, if you look at the monthly time frame, Apple is actually reacting from this trend line resistance, and we can see bearish RSI divergence on the monthly time frame. So Apple really need to take out this inverse fair value gap to keep its longer time uptrend intact. Otherwise, the rejection from this 78.6 FIB level between the swing high and swing low may act as a lower high to come and test this support level under 200 SMA. Looking at Amazon also last week retraced back to test this previous support, which may now turn as a resistance, and we have 20 EMA to test between this gap. So any rejection at these levels may lead Amazon to test this gap and even its swing low. We can see on daily time frame that the 20 EMA crossed down below 200 SMA. So any rejection of this retracement to test this gap under the EMAs may lead to come and test this gap and these support levels. Look at the weekly time frame on Amazon. Last week we had a bullish engulfing candle from this support level to test this previous support breakout, which may now act as a resistance. and we have this large bearish fair value gap on a weekly time frame. So we may come and test this larger time frame uptrend line or 200 SMA on a weekly time frame if we see any rejection at this resistance or this gap or this EMAs. Okay, the monthly time frame looks okay because we can see a support from 20 EM and monthly time frame. So let's see how it closes on next week based on the resistance levels on daily and weekly time frames. Looking at Ford is on this uptrend since it broke out of this resistance level at 10:45. It broke out in July and it retested in the same month. Since then it is on the uptrend, respecting this trend line. Now we can again see it respected the trend line during the earnings, and it formed a fair value gap, and last week it reacted from that fair value gap and formed a Morningstar bullish candlestick pattern after sweeping the liquidity below 20 EMA. It looks similar to what we saw in SPY on the lower time frame on Friday. A red candle, a doji, and then a bullish engulfing candle after sweeping the liquidity below 20 EMA. A red candle, a doji, and then a bullish engulfing candle after sweeping the liquidity below 20 EMA as well as testing this previous resistance breakout. So Ford may go and test this previous resistance at 14.34 or even 14.57 level. Longer time frame it may go and test the supply zone 19.5 and 18.5. Looking at Walmart saw a reaction from this trendline resistance during the earnings. Now it is retesting this previous resistance breakout, and on Friday it formed a dragonfly doji candle testing this previous resistance breakout as well as reacting from this fair value gap. Also we have this medium time frame uptrend line, so we may go and test this resistance at 126.4. If you look at the lower time frame in Walmart, it had this it swept the liquidity below this low and moved impulsively to this resistance level, forming fair value gaps. If it retraces back to test this fair value gap or this support level, and any bullish reaction at this area, may help to retest this resistance or the supply zone around 125.26 level. Looking at the weekly time frame, it has a bearish reversal candlestick pattern. We had a strong green candle followed by a hanging man and then a bearish engulfing candle, but we are in an uptrend and it took support at 9 EMA on weekly, also full reacting from this fair value gap. So the reaction at this level is important. We have a gap here as well as trading below these EMAs on daily time frame, but we are in uptrend. So if you fill this gap, closes above it, then it may intact to this uptrend. But if we see a reaction from this gap and EMA and this resistance, then we may see a pullback to test this support or this uptrend line or 200 SMA. Thank you for watching.